Thanks everyone for joining today's pop-up focused on our spring class entitled Financial Inclusion in Practice, a tool set for the digital age. Anand and I are excited to teach today on this important topic of financial inclusion and to dive into why it's so critical to people's lives. We'll also give you a brief overview of the class that we are going to offer this spring. So my name is Alec Raia, and in addition to being an adjunct here at CGA, I work full-time at MasterCard, where I focus on strategy related to digital payments for what we call new payments. Really, I think of it as the future of where payments are headed. My background spans the private, nonprofit, and public sectors. At MasterCard, I've spent most of my career building a product line specifically to help international development agencies deliver humanitarian assistance quickly, safely, and cost-effectively. I've also worked with Anand on developing solutions for people living at the base of the economic pyramid. Now, my experience before MasterCard helped prepare me to support these initiatives, as I was both an investment banker at Goldman Sachs, where I learned the commercial and financial skills needed to create and sell products. And I was also a humanitarian aid worker at the International Rescue Committee, where my time in Africa and Asia gave me perspective about the challenges related to delivering humanitarian assistance after wars and natural disasters. Now, to round it off, I started my life as a school teacher in the Bronx and then in West Africa, but more on that later.
Hey, thanks, Alec. It's nice to meet everyone. I know a few of you are still filtering in, but it's great to meet all of you. My name's Anand. I also work at MasterCard with Alec. Most of my career has been financial inclusion focused. I began my career as a mainstream consultant, but very quickly pivoted to a financial inclusion field called microfinance. We won't get into the details of what microfinance is, but it's a mechanism like many others where people at the base of the pyramid can band together and collectively access credit, which they can apply to a small business or an enterprise, which helps them improve their economic lives, right? And so that's where I cut my teeth on grassroots development kind of issues, and then moved on to mobile money and agent banking. Both are concepts, again, a little bit different, but drive financial access to people essentially at the base of the pyramid. At MasterCard, most of my career was with Alec, building out the financial inclusion products of MasterCard. And you'll see a few examples as we dive into today's pop-up. And currently I lead our government engagement work. So I develop solutions that drive to governments, capabilities that drive financial inclusion, government disbursements, collections, and so on and so forth. We're very excited to talk to you about this topic of financial inclusion. It matters. We also think that it kind of paves the way for a very interesting dynamic of how you can drive social change or change at the base of the pyramid, but in a manner where a business model also emerges, which includes stakeholders like the private sector, companies like MasterCard, that can actually bring their technology capabilities to the base of the pyramid and make a difference. So it's this intersection of profit and purpose, and how do we actually get there? That's a very interesting topic for us to kind of uncover over the next 20 minutes. But before we go into too much of theory, let's actually bring financial inclusion to life, right? First things first. Oh, wait, did we have the wrong slide? No, we don't. I'm just kidding. Coffee. Let's use that as the first basis to dive into financial inclusion. I'm sure if your lines were unmuted, you'd all ask me, what the hell does a Starbucks cup have to do with financial inclusion? But most of you all would have had a cup of coffee this morning. And what if I were to tell you that over the next 15 years, this price of your cup of coffee would more than double? What if I were to tell you that by 2050, this cup of coffee might cost as much as a piece of steak? And you'd be like, maybe, but unlikely, I would think. You may also tell me, what the hell does that have to do with financial inclusion? And I would tell you that financial inclusion is the only real basis why you would see this price increase. Let me explain further. So if we look at people at the base of the pyramid who are coffee farmers, right? This is a picture of a farmer in Chiapas, Mexico. What you will find is that farmer livelihoods are threatened today, right? So a farmer does not make sustainable livelihood with coffee to an extent that future generations of these farmers do not want to be reliant on coffee as an occupation anymore, or farming as an occupation anymore, which threatens the very product that all of us consume on a daily basis. Now, you would think that, the Starbucks of the world, Nestle's of the world, and there are other coffee trading companies like Neumann Coffee and Barry Callebaut. These are large companies that are well aware of this, right? And it's in their interest to make sure that farmers get paid a fair price, their livelihoods are sustainable. And so what are they doing about it? I mean, if it's in their interest, and if coffee is going to be a threatened commodity, their very existence is at threat, wouldn't they want to pay farmers a better price? And it turns out they do, but they can't. And that's because this farmer in Mexico is financially excluded. So if Barry Callebaut or Neumann Coffee wanted to buy coffee directly from this farmer, they would literally have to drive a cash truck into Chiapas, Mexico. And if anyone's been in Chiapas, Mexico, that's not a place you want to drive a cash truck into. Go farm to farm, collect coffee from these farmers and pay them in cash. Probably not a great idea. So what this leads to is a long middle, a trading line with a lot of middlemen in the middle that essentially are then buying coffee from the farmers, not paying them fair price, aggregating the coffee and then selling it to the large trading companies. So when these trading companies started talking to us about how do we solve this and how do we work with farmers, what we introduced was a pretty, elegant solution, right? So what we said was, and this is how it makes a difference. We provided farmers with an essential platform where they could deal directly with the coffee trading companies, right? What this solution gave them was farmers information, firstly about market prices. So what is their coffee actually worth? Two, about technical advice on what they could potentially do to improve yield on their produce, and many other advantages that digital solutions obviously provide. But it also gave them the ability to get paid electronically. So what would happen is a Neumann Coffee would text them saying that they're setting up a coffee center close to their farm. The farmer was invited to bring their produce directly to the farm, agree on a price beforehand, which obviously is more than what a middleman would pay them. They bring their coffee to the farm, they do the transaction and get paid electronically. So this actually negates any cash handling. It allows Neumann to deal directly with the farmer. And a future audit actually showed that farmers who were in the program had a 30% rise in income just from a banking transaction, right? Not from any improvement in yield or anything like that. It was just purely as a result of being paid a better price. So that's how financial inclusion can help. And if you extrapolate these numbers, you're really looking at, this is one amongst many millions of people, right, who are employed in farming at the base of the pyramid that essentially operated, you're not talking about big farmers, because there are farmers that operate large farms, but you've got 72% of all farmers are what you would call smallholder farmers. So that's the magnitude of where financial inclusion can actually make a difference. We won't spend a lot more time on this example because we have a few more examples to talk to you about. So I'll turn the page over and invite Alec to walk through the next one.
Thanks, Anand. Well, let me paint another picture for you, and one that might not hit as close as home as your morning cup of coffee, but which is nonetheless pressing. I'm a parent. I have a 5-year-old son at home who goes to kindergarten at a public school here in New York City. And each morning he wakes up excited to go to school, to see his teachers, play with his friends, and even to learn. Now, my family is fortunate because we're able to cover all of the school-related costs that he has. And my son consequently gets the many benefits that school provides. Across the globe, for kids that are able to attend school, learning is only part of the benefit. Education is not just about providing a path to a sustainable income someday, although really that's critically important. Schools also provide psychosocial development. For many kids, the only healthy meal they'll have each day. And education is associated with improved health benefits, such as seeking preventative health care at some point in your life and also receiving important vaccinations. But let me tell you a stat that I couldn't believe when I heard it. 1 in 5 school-age students around the world are not in school today. To put that in perspective, that's almost the entire population of the US unable to attend school. Now, Wars and displacement, child marriage and child labor, gender discrimination, these are all some of the well-known barriers that are keeping kids out of school. But guess what? Economics matter too. For families living at the base of the pyramid, education is frequently their largest expense after school. And school-related costs are the biggest financial barrier to education. In fact, too many kids around the world are out of school simply because their parents can't afford to pay school fees, or even if school is free, to pay for uniforms and supplies. Now, this is because so many households around the world are smallholder farmers, like the coffee farmers we were just looking at. They may be small traders, or they have other jobs with irregular incomes. Yet school-related expenses must be paid in lump sums each semester. Now, coming up with this money can be tough, particularly if families lack access to savings accounts or credit. Moreover, making payments can also be challenging. Many times parents have to leave work to go to school, travel long distances and pay for transportation, stand in long lines to make payments, and all of this can lead to absenteeism, or worse, families pulling their kids entirely out of school. So think about this for a moment and imagine a primary school age kid anywhere in the world who's been going to school for a semester. But when school fees are due for the second semester, the family isn't able to come up with those costs. So that kid is held out from school. At first it's temporary, but that changes over time and it becomes permanent. Maybe because the student loses interest or falls behind his peers, or has to get a job to actually support his family and can't leave that. Imagine how the trajectory of that life changes and about how that kid's potential outcomes deteriorate. Doesn't have the opportunity to interact with friends every day at school. His basic literacy and numeracy skills stall. Maybe the school lunch that he had was the only meal of substance he got each day. And even a school vitamin and vaccination program helped keep him healthy. All of that goes away simply because his parents don't receive a steady paycheck every month and have no access to financial services to bridge these educational needs. That's incredibly sad. And in fact, that one stat, that 20% of kids are not in school, is what made me leave my job as a teacher in the Bronx, move to West Africa almost 20 years ago, and begin teaching at a small school on a refugee camp. Eventually, it led to my life as a humanitarian aid worker, and today, my career at MasterCard. Now, I thought at the time that this under-resourced school that I taught at here in New York, where I often didn't have enough books or paper for my students, was really the bottom of the educational ladder. But I was shocked when I learned that nearly 300 million kids have no access to education, and I wanted to find a way to help. And I'll tell you, financial inclusion is one way we can help address this lack of universal education globally. For example, through research and technology, we've been able to build a mobile solution that is helping families by allowing them to pay for school-related expenses securely and with their mobile phones. And they can do this in small increments or installments. That means they pay for school when they have money available, rather than in this single lump sum that often is tough to come up with. That solution, singularly, is helping get kids in school, and it's helping to keep those kids in school. Now, solutions like this also have additional benefits. For schools, it gives them a platform to manage and track student payments and attendance. For government, it even provides them information on teachers' attendance to support salary disbursements. And it moves governments really a step closer to making data-driven decisions about education. But at the end of the day, as we sit here on this call and talk about it, it's just simply another example of how financial inclusion is helping to improve people's lives. Anand, I'll move over to you for the next example.
Fantastic. Thanks, Alec. Let's jump to the other end of the spectrum, right? From kids to old people. They're just as vulnerable by not being included in the digital net, right? Think of a time like COVID, right? A lot of people, old people, rely on governments to receive social assistance, right? You think about even in the US, and you think about the disproportionate number of people on welfare as they age, or around the world, that's true. And certainly the pandemic has actually accelerated the need for people at about a certain age to receive some assistance. But if you're financially excluded, think of our maybe, God forbid, like, older relatives or anyone that you'd know having to go through this experience where if they don't have an account, they literally have to wake up in the morning, go to a nearest government cash point, right? A cash truck will literally show up close to where they live. They have to queue up. Often places where they queue up have very little facilities, no bathrooms, no shade. And that's not the worst experience. They could actually end up towards queuing up for most of the day, reach the front of the line and realize that the cash truck has run out of money. Or even worse, have to bribe the agent that's actually distributing the cash to make sure that they actually sign the passbook where they receive their pension or whatever it is. And this is all true. This is literally, as you'll see later on, these are stats that typically hit home and are widely prevalent across the world. So what can you do about this, right? Essentially, when you start to adopt digital solutions, electronic accounts, where people can be paid electronically, beyond the fact that you cut all this inconvenience out of their life, you're actually offering them something as basic as dignity, right? The dignity of not having to go through that entire experience, the indignity of having to like bribe someone or being asked for that, and not to mention all the other aspects that affect their lives. Plus, in the time of COVID, that kind of physical experience is actually just a paramount health risk. And so digital inclusion is what we think an essential component that adds dignity also to people's lives, right? And allows them to go through that. On the flip side, on governments, right, it cuts out all these aspects of inefficiencies because it costs a lot of money to drive a cash truck and make sure that you can move all that cash around. Two, it actually makes sure that you're cutting across fraud and leakage because that's definitely a big component when cash is involved. And so on all sides, this actually makes a lot of sense. And so MasterCard, a large part of what we do is working with governments to make sure that people get the ability to receive their money in a manner that drives equality and dignity into their lives. As I told you, this is a very large number, right? So if you think about, the amount of money that governments were spending disbursements globally, a little less than half of that is today still being paid in cash. So all that entire process that I talked about is very much still a prevalent. And in times of COVID, which have accelerated, there's been that many new programs which have been launched to try and provide that assistance to people who are at the base of it. So what we try to do with these three examples is to give you a flavor rather than provide. You'll learn a lot more in the course around financial inclusion, how it's defined. But we wanted to paint a picture of what it is and why it matters, right? Because if you get that, then it truly starts to say, okay, why should we even care about this topic? And that's what we wanted to do with these three examples. I'm going to turn it over to Alec to take us through the scale of the problem and a little bit about the course.
Thanks, Anand. And as you just mentioned, we provided really just three examples of lives that are more challenging simply because people don't have the same access to financial services and products that many of us on this call today really take for granted. But as you can see from this map, the scale and scope of the problem is really much larger. And really, it's nearly 2 billion lives larger. So solving these problems is really not simple. But often what we do find is by dissecting the challenges people face, applying a set of tools and methodologies to the challenges we uncover, and assessing the technology people have available, we can create solutions that provide access to affordable, sustainable financial products that can help solve these problems. This is what we call financial inclusion in practice. And as its foundation, it's all about helping people, making them more resilient and giving them a better chance to live happy, healthy, fulfilled lives. But as I mentioned, creating these solutions is not easy. So let's look at the class that we teach in the spring. What we do is we take a practitioner's view of the information and skills that are needed to tackle financial inclusion problems. That's because we believe that to achieve universal financial inclusion, practitioners need to be equipped with a diverse set of skills that includes not only understanding what financial inclusion is and isn't in its many dimensions, but also the capacity to apply practical tools to tackle these very real world problems. So our class is structured as 4 distinct modules, each of which introduces what we call one of the big 4 business skills. First, we explore data analysis, which is really the ability to consume, interpret, and manipulate data sets, because We think that's needed to formulate and then interrogate solutions. Second, we learn a little bit about design thinking, which is the ability to leverage consumer-centric design principles to develop products and solutions that are really fit for purpose for people's lives. Third, we investigate financial modeling, which is the ability to employ Excel as a tool to build financial models to assess the viability of a business case and make sure that whatever we're proposing is actually sustainable in the long run. And finally, we dig into business modeling, which is the ability to make decisions and formulate strategies that shape commercial decisions to ensure they are successful. So although these 4 big business skills are useful in the financial inclusion space, they're also widely applicable to a broad set of careers in public, private, and the nonprofit sectors. And that's why we think they're useful for everyone. So with that, thank you for attending this. We'll turn it over to a bit of Q&A. Anand, I'll let you lead that section.
Sure. So I don't see any question Q&A feature unless I'm missing something.
I think folks, maybe as we're doing this, you can sort of feel free to put into the Q&A section any questions you may have. We've got about 10 minutes here, 8 minutes that we can sort of answer these. But while we're waiting, Anand, how about I ask you a question? Because you're a wealth of knowledge here. And so one of the questions we often hear, and I think is a really important fundamental question about financial inclusion is this: is financial inclusion, which is this idea that you give folks access to a financial product or service, is that the goal? Is that the goal, just to make sure everybody has a checking account or a debit card or a credit card or a mobile wallet, whatever it is? Is that the goal of the work that you and your colleagues do and all of us do here at MasterCard?
Yeah, no, thanks, Alec, for putting me on the spot. I think, this is my point of view, right? So I genuinely believe financial inclusion is an enabler, right? Think of it like any other network in your life, right? So if you have a professional network, you're very likely to get ahead in your career professionally. If you've got a social network, you're likely to make better friends and have a better social life. If you've got you're connected to a mobile network, you're more likely to be able to communicate better with people. Any of these networks, if they're non-existent in people's lives, create very dis-level societies, right? People who have access, people who don't have access to the same set of opportunities. And opportunities is the key word here. So it's an enabler of opportunities for people to do better financially in their lives. So economic betterment, economic improvement of people's lives, right, is rooted in financial inclusion. There's also one other word I would associate with it. It's opportunities and risk, because certainly a large portion of people, even in the US, there's a very prominent stat, and I think it's about 30 or 40% of people are one paycheck away from falling into like severe economic distress. The ability to guard against that risk, and that's even more accentuated if you don't have the appropriate financial tools to manage that risk. So both of those being the key words to create a level playing field where people have the same set of opportunities to drive economic progress and to guard against economic risk is what financial inclusion truly is.
That's great, thanks. So really more of an enabler of these efforts rather than a goal unto itself.
Absolutely.
And I think we see that where financial inclusion is actually explicitly talked about as an enabler of many of the SDGs, for example.
Absolutely, absolutely. So we did have a question that came into the Q&A. I'm going to turn this over to you, Alec. How does this class relate to the MasterCard practicum? Is it a prerequisite?
Good question. So Anand and I also teach a class that's called the MasterCard practicum. And what that is, it's a business consulting practicum. We do it in the summer. So we did it last summer. We'll do it this coming summer again, where we take a select group of students. It's highly competitive. And we choose a handful of students to actually come to MasterCard and have not an internship, because we do teach during the course of the summer, but the focus is on taking and working with business teams here at MasterCard and actually helping them answer real business problems that they have. So we put together a scope of work with the business team to identify what the challenge is, that the business team at MasterCard wants to answer the research question they want. And then the group of students actually goes out and does that research and turns it in. And this isn't just an academic exercise. You're actually doing work that if we didn't have the students doing it, we would hire McKinsey to come in and do, for example. And so it's really exciting and very meaningful, we have found, for both the students who participate, but certainly for the business teams that get the answers that the students generate. This class is not a prerequisite for that by any means. However, it does provide a good foundation, right, for the work that you'll be doing, which is during the summer focused on financial inclusion problems. I should have mentioned that. So the business challenge that you're answering ties into financial inclusion related effort. And so we think that there's certainly a lot of synergy and overlap, and it's useful, but not a prerequisite.
Any other questions? If not, I'm going to ask, you're most welcome, Raia. We're going to ask Alec one more, okay? Alec, I'm going to turn
the tables
one
here.
more question over to you. What do you think of the progress we've made thus far, right? So we hear a lot of talk about digitization and and financial inclusion as a term, like we've been practitioners for the last 20 years. What do you think has happened over the last 20 years? Have we made any progress? Has the lens changed at all?
That's a really good question. It's a really good question. Our former CEO at MasterCard used to talk a lot about how there's been so much excitement and interest about the digitization happening around the world and smartphone take up. But he used to say this one thing that we have to be very careful about, that we don't create the internet of everything without the inclusion of everyone, right? And actually sort of digitization can create almost another barrier, right? For folks to sort of be included into sort of the modern world. And when we think about financial inclusion, you saw the map that we posted where we said 1.7 billion people lack access to financial services and products. Now, that is a figure from the World Bank in 2017. Every 3 years, typically, we do a big study globally to sort of account for these numbers. The last one should have happened in 2020. We should have received those results at some point this year in 2021. But of course, the pandemic disrupted that. And so hopefully that'll come soon. We do expect that there'll be improvement in those numbers to some degree, maybe not as much as we've seen historically, because the pandemic has also created sort of two crises, right? There's the public health crisis, which is first and foremost what it is, but there's also been an associated economic crisis. And we think some of that will have stalled some of the financial inclusion efforts. But when we look back at the last time that we had numbers, we do see a significant increase that's in the number of people that have received access to financial products and services, so have become financially included. But it's not been consistent, and it's starting some of those big numbers. So imagine 400 or 500 million people over a 3-year period who receive financial services, mass disparities often at the regional and country levels. And so I think the answer is yes and no, frankly, that there's been progress in terms of big numbers of people receiving access to financial services. But what we're starting to see are real concerns about areas where we're not making progress, in let's say geographically. So areas, regions of the world where there's just stalled progress, and it seems really challenging to sort of drive forward financial inclusion efforts. Second, I think we're starting to see emerge some discrepancies around different lines. So for example, gender, where women in certain areas are being left behind at a greater rate than men who are being financially included. And that's something for us to be concerned about and to address. And I think the third big area that folks are worried about, that we are trying to address now, it's really at the forefront of the industry, is around usage. So for a while, there was this idea that financial inclusion was all about giving people access to accounts. And once we've done that, we check the box and job done. We've done a good job. But then if we dig deeper into the data, what we find is that people only use financial products and services. Myself as well. I have lots of debit cards in my wallet that I don't use today. I only use, and folks only use financial products that they find useful, that really better their lives. And what we've found is a lot of dormancy, where folks have received access to financial services, but they're not using it. So how can you count that? How can that actually, help people's lives if you're not using it? And so what we're trying to do now is really address this idea of a lack of usage around folks who have received the accounts. So again, a big way of saying, yes, we're making progress, certainly, but there's still a lot of work to be done, and a lot of very much more nuanced work, I think, is really the attention and the clarion call for the industry going forward.
Fantastic. Great. I think we're out of time and we have no more questions. So I think we can wrap this up, but it's been a pleasure. We don't see everyone on this call, but I know that thank you for taking the time to kind of join this and feel that this topic is really important. We hope to see many of you in the spring. And again, I think you may be able to reach Alec and me. If not, then we can share information of how to reach us through the NYU channels. But feel free to drop us a line if you ever have any questions about this course.
Absolutely. Yeah, absolutely. Thanks, everyone. We hope to see you around campus, potentially in our classroom. But certainly, if you have any questions around our class or anything financial inclusion related, we love engaging on those topics, as you hopefully can see. So we're very open to chatting about that. So please just reach out to us through CGA.
Thank you so much.